Hey everyone, welcome back to Corporate Decoder. Today we are diving into a proxy statement and it is surprisingly exciting. It's about ZimVie, a dental implant company, and we're going to uncover not just board nominations but also some big strategic shifts. Trust me, it's more than just names and numbers. It's a story about refocusing a business. First off, this letter to shareholders highlights a big move. ZimVie sold its spine business. It is now fully focused on dental. The sale was in 2024, so they're now looking ahead. The company is talking a lot about innovation and improving operations to bring value to everyone. They're trying to sound confident about the future, as you might imagine. Now let's look at what shareholders get to vote on at the annual meeting in May. There are three main proposals. First, they're electing a director. Second, they're asking shareholders to approve their choice of accounting firm. And finally, there's a vote on executive pay, a say-on-pay vote. For the director election, there's only one nominee up for a vote right now, Vafa Jamali, who is the president and CEO. Another director, David King, is leaving the board, so they are reducing the board's size. Jamali's experience is in the medical device industry with lots of leadership roles at companies like Medtronic. This includes strategic planning and financial management. The board wants him there because he knows the company well and can help guide strategy. Interestingly, after King leaves, Jamali will also become the chairman of the board. This means he'll be both the CEO and chairman, which is something boards consider carefully. To balance that out, they're also appointing Vinesh Asar as the lead independent director. Asar will act as a go-between for the other independent directors. This is all to make sure there's still independent oversight, even with the CEO also as chair. Risk management is also a key responsibility of the board. The audit committee is really important here. It oversees things like legal compliance, data security, and cybersecurity. The board gets reports from different members of the management team about these risks. Let's peek at the committees. The compensation committee decides how much the executives get paid. They are made up entirely of independent directors. This committee also looks at risks related to compensation, making sure the executives aren't encouraged to take excessive risks to get bigger paychecks. Moving on to the accounting firm, they're asking shareholders to approve PricewaterhouseCoopers or PricewaterhouseCoopers or PwC as their independent auditor. For this year, the board thinks PwC is a good choice because they have been independent and have done a good job. Looking at the fees paid to PwC, most of it, about 89% in 2024, was for audit-related work. The rest was for tax services. It's typical for the audit fees to make up the bulk of what an accounting firm gets paid. Now for the juicy part, executive pay. The table shows how much the top executives made in salary, stock awards, and other compensation. For example, in 2024, Vafa Jamali's total compensation was about $7.2 million. Most of that came from stock awards. In 2024, the Compensation Committee approved annual grants with target grant date fair values of $4 to $75 million for Vafa Jamali, $1.3 million for Richard Heppenstall, $800,000 for Heather Kidwell, and $600,000 for Indranil Kanagalkar. Here's something to note. Based on performance, the payout to executives under the executive annual incentive plan was very low. In fact, the top executives elected to forego their cash bonuses in order to increase the payouts to the rest of the team members in the organization. Equity incentives are a big part of executive compensation, aligning their interests with long-term shareholder value. The company also has stock ownership guidelines to make sure executives hold a certain amount of stock. Finally, let's see who owns the most stock. Canberra Capital Management owns about 9.8% of the stock. Then you have Evershept Partners, BlackRock, Vanguard, and Jay Goldman, who also own a significant amount of shares. Looking at ZimVie, it seems they're making a big bet on the dental market by selling off their spine business. That's a pretty significant refocus and a bit risky because now all their eggs are in one basket. But if they can capitalize on that dental market and stay competitive, this could pay off big time. Their sales numbers are looking all right, however. The fact that they lost money this year may be concerning for some investors. That board shake-up and leadership change with Jamali becoming chairman is also something to watch. Will it streamline decision-making or concentrate too much power? That's the question on my mind. They seem well governed for now. So what do you think about ZimVie's transformation? Is focusing on dental a smart move or too risky? Will Jamali deliver as chairman and CEO? Leave your thoughts in the comments below, and as always, don't forget to like, subscribe, and hit that notification bell for more deep dives into the corporate world.